Hello and welcome, traders, investors and clients, to our Blackbook series of videos where we educate you about the fundamental and technical aspects of the markets that are most important to you. First, let me explain the reasons for the delay in getting this video out. The week before last, as the bloodbath took place in the marketplace, we wanted to wait till the end of the week to gather evolving information to give you a better market update. Then last week, with all what's going on in the markets, it was a scheduling nightmare for me to get this update filmed. So without further delay, let's get to the market update. First, I'd like to remind precious metals investors, I know you're frustrated. You have probably lost more money this year than you have made in the metals sector. But this is the time that you should not give up. This is the time that you should focus, because you might be getting the best entry point in some of these markets. And I'll show you what I mean by that. Let's get to the gold market. First, gold broke through its major support zone between 1624 and 1620, which we have outlined in our videos many times. And then it broke through the psychological support at 1600, which brought in a major new wave of selling, and gold went as low as 1527. It's imperative to keep an eye on the gold market and how it reacts at this price level, simply because we want to see if a fresh wave of buying comes in at this price level and if the physical demand is returning to this market. Now, if you were to look at a daily chart in the gold market, you'll see a well-formed triple bottom showing up in the daily chart. And all of the lows are in the 1520s, and it looks like this is a formidable support zone. It seems like the physical buyers have been looking for lower prices and cheaper prices, and they were not satisfied, including the jewelers at the mid-1600s. Now we want to figure out and monitor how they feel about the mid-1500s, because the physical buying is what's been absent for the last 4 to 5 months in the gold market, and that could be a major catalyst in a trend reversal. Now let's get to the silver market. Just like gold, when silver consolidated below its support zone, especially below $30.40, and it broke through the psychological support at $30, the market completely broke down and continued lower, as low as $26.75. If it breaks $26.50 on the downside, it could go all the way and test the 61.8% Fibonacci retracement at $24.22. And that's a Fibonacci retracement from the low in October of 2008 all the way to the high in May of 2011. And that's the retracement I'm talking about. On the other side of the coin, if it bounces off the 26 handle, it could first go and try to attempt to cover the $30 handle. And if it moves past that, we're looking at $34 in silver. Just like in gold, if you're looking at a daily silver chart, you can see a triple bottom forming. All of the lows are in the 26 level, and it looks like the 26 handle is a formidable support zone. This zone, which is between $28 and $26, will give us a clear indication of whether the silver market wants to continue to go lower or if there's going to be a trend reversal, if it wants to bounce and go higher. Now let's look at the fundamental side of the markets. A plethora of fundamental events unfolded in the last 2 weeks, and they did have a significant short-term effect in the markets. First, the elections in France. A couple weeks ago, Sarkozy was ousted by Francois Hollande. The new president is a major advocate of stimulus measures inside the Eurozone and getting the ECB involved more in solving the European debt crisis than Sarkozy ever was. The euro started to head much lower as this was unfolding, and the US dollar started to go up significantly. The question remains whether the new president of France can get Germany on board for new stimulus measures inside the Eurozone. Next, the Greeks went to the polling booth, and they elected a government with no majority. The biggest problem with that is that the new coalition government does not want to agree to the austerity measures put forth in the bailout plan for Greece agreed earlier this year. This causes a major stumbling block in financing the Greek debt because it could worsen the European debt crisis. Why? Because Greece may default and exit the euro. We don't think that is a strong possibility, but it is worth monitoring closely. Also, this Wednesday, there's an EU summit happening, And what's interesting is all the European leaders will get together to figure out what has happened and how to move forward from this point onwards. History tells us that EU summits usually end up being a kick the can down the road kind of an event, but let's watch this situation, watch this meeting, and see what happens this time. Also this Wednesday, Western leaders are meeting with Iranian leaders about their nuclear saber rattling in Baghdad. This could have a major effect on oil prices, especially since oil prices have come down significantly from $107 a barrel to almost about $90 a barrel. Could the risk premium come back into the oil market? That's a major question, and especially because oil is a leading market, let's look at that. Now let's get to the bullionite moment. The key word for a bullionite at this junction is patience. Trading in and out of the market is exciting, but sometimes the most significant decision is knowing when to stay on the sidelines. For the last couple weeks, we have recommended bullionites to have their money on the sideline. Wait till this storm is over. Look at how these markets are responding and reacting at strong support levels. Look at information that you would normally avoid or not pay attention to. For example, like ETF outflows. Continue to monitor the net outflows of major ETFs. Are the outflows getting stronger or are they decreasing during this sell-off? Because that would indicate a major trend reversal. See if the buyers are coming back in a strong fashion at major support levels. Or are the sellers getting emboldened? It's easy to decipher that. You have to look at a 60-minute chart and a 4-hour chart. Pay attention to trader sentiment. Is sentiment overly negative or is bullishness almost absent? That could be a sign of a major reversal. Pay attention to something the legendary investor Warren Buffett said. When everyone's greedy, be fearful. When everyone's fearful, be greedy. If you have any questions or thoughts about the markets and information that I have shared, please don't hesitate to contact us.